Welcome to Wall Street Unspun with your host, Peter Schiff.
But it's a giant bubble in search of a pin, and it's going to find one.
Are you confused with the ups and downs in the economy and what it means to you?
Don't believe the propaganda, and that's what it is. When you're listening to an analyst on a lot of these popular financial shows, you're not getting investment advice. You're getting propaganda.
Get ready to untangle the web of misinformation provided by the mainstream media.
These firms are trying to sell you stocks. Their real clients, their banking clients, are trying to get rid of stock.
And now, here's your host of Wall Street Unspun, the president of Euro Pacific Capital and a licensed broker with a passion for truth. It's Wall Street Unspun with Peter Schiff.
Hi, everybody. It's Peter Schiff. Welcome to another live episode of Wall Street Unspun, your midweek market update. This is Peter Schiff. I host the show every Wednesday evening. We do it at 8 p.m. Eastern Time, 5 p.m. Pacific Time on my website, www.europac.net, on shortwave radio 5.07 megahertz. If you don't hear it live, you can always catch the podcast on my website. Also, we've been posting the Wall Street Unspuns to my YouTube account, Schiff Report, so there are plenty of places to catch it. I also notice a lot of other people happen to copy these broadcasts and put them up on the internet on YouTube, so it's pretty easy to listen to the ones that you miss. Anyway, the number to call, toll free, 888-678-9597, 888-678-9597. There are a couple of media appearances I happen to know about this week. On Friday, I will be on CNBC Reports. That's a live show at 8 p.m. Eastern Time, 5 p.m. Pacific Time. I'm also going to be on CNN on a special Your Money that's going to air Saturday, I believe, at 1 p.m. It's a tape show, so I'm taping it Friday morning, and it airs Saturday. They might be repeating it on Sunday as well. I forget the time, might be 2 or 3 o'clock, so that's on CNN. Usually, I don't have that much advance warning on a lot of the shows. They call me the morning of, and I end up doing it. So again, if you go to my website, like if you go to the Europac website right now, you'll see in the upper right-hand corner, you'll see banner ads alternating between CNN and CNBC. So if you make a habit of visiting my website on a daily basis, you will certainly know about any media appearances that I have scheduled later that day. Certainly, if I know about them in advance, I can mention them, on this show or sometimes on a video blog. If you don't know about the video blogs, and I've been doing these blogs now for a few months. I do sometimes several of them a week, and I put them on my website. They're also again on the YouTube channel, SchiffReport.com. Anyway, it's been a difficult day for me today. I didn't have a chance to really pay too much attention to the markets. Unfortunately, we had some bad news this morning. I was waiting for my 7-year-old son to arrive. He turned 7 today, and we were going to take him to a water park, my girlfriend and I, to celebrate his birthday. Unfortunately, my girlfriend received a phone call early this morning while we were waiting for him to arrive from her mother, informing her that her 40-year-old brother had been killed in an automobile accident that morning. And so it's been a very rough day for her. It certainly lets you appreciate how fragile we are and how fleeting life can be, and puts a lot into perspective. The problems that you think you have, don't look like much when something like that happens. Certainly to someone close to you, and imagine, what my girlfriend's going through, and it certainly makes you reflect on everything that you're doing, and thinking about trying to treat each day as if it's your last, because one of these days it will be, and you just don't know. And so you want to make sure that you're enjoying your life. And I know, we talk on this show about a lot of things, and there's a lot of problems in the country, a lot of problems in the economy. But we have to stay focused on a lot of the other issues and a lot of the things that, in the scheme of things, are more important than the stock markets and, government policy. I mean, certainly, these things are important, but there are other things that are certainly more important. So today was a day like that. Anyway, so I didn't really prepare much. Not that I normally prepare much for the show, but at least I'm more involved in the market news on the day. I know the big news of the week that I will talk about again is the Greenspan renomination, and how excited everybody is. Not Greenspan, I mean Bernanke, and how excited everybody is that he's being renominated. And of course, everybody is thrilled at what a fantastic job he's done. And of course, that's why he's being renominated. Happy days are here again. Prosperity is just around the corner. Ben Bernanke has saved the day. Well, what exactly did he do to save the day? Well, he flooded the country with cheap money. We bought up all the bad loans. We got them off the books of the financial institutions that deserve to eat the losses, and we stuck them on the books of the American public. We swept a lot of problems under this rug, and we're supposed to be applauding Ben Bernanke for handling the broom. He inherited a very, very bad situation from Greenspan, but certainly he was very active in the Greenspan Fed. He was a board of governor, and he was probably the most vocal. I wrote another commentary today entitled "The Devil You Know." It's on the website Europac.net, in which I spoke about Ben Bernanke. I also spoke about him at length in my most recent video blog. Again, that is up on the internet on my website. So definitely, I would no need to repeat everything I said there. But if you read the commentary I wrote, "The Devil You Know," and go watch my video blog. I talked about it quite a bit, but everybody is falling in love with this guy, and he's great. Of course, everybody loved Greenspan too. Remember how popular he was? He was the maestro. I remember on CNBC they would show him. They would play this song, Mr. Big Stuff, and he was walking down with a little swagger, and everybody was looking at his briefcase to see how fat it was, and he was kind of like a celebrity. And why was he a celebrity? He was a celebrity because, he made everybody feel good. He was the life of the party. Instead of being a real Fed chairman that takes the punch bowl away, he was spiking the punch bowl. He was going to the liquor store, going on beer runs. I mean, he was bringing all kinds of girls to the party. It was great. Everybody loved him, and that now you're getting the same thing for Bernanke. Wall Street loves him. Why not? They're keeping the bonuses flowing. They're keeping the big paychecks going. The politicians love him. He's making their job easy. No tough choices for anybody. Whatever we want to spend, Uncle Ben is there with his printing press. We can do whatever we want. There's no bailout too costly. No deficit too big. No stimulus checks we can't write. No, not only cash for clunkers, we could do cash for appliances. You name it, we got cash for it. Where's the cash coming from? It's coming from Ben Bernanke. So they like him, they love him. But unfortunately, that's not his job. He's the chaperone, right? I mean, you don't want a chaperone at the high school prom where all the kids say, "Wow, this guy's he's a great chaperone because he lets us do whatever we want." You need somebody to keep them in line. And he's not keeping anybody in line. He's not keeping the politicians in line. He's not keeping Wall Street in line. And what is the payback? Sure, the economic downturn is not as bad as it would have been had he had the integrity and the intelligence or whatever, the knowledge to do the right thing. Sure, we would have had a deeper decline had we let more companies fail, had we not tried to artificially stimulate more consumption, had we allowed more people to lose jobs in non-productive areas so that they could be positioned to get more productive jobs, had we made the tougher choices in government to reduce spending, we would have had a little bit more pain now, no question about it. But we would be laying the foundation for a bright future. Instead, we took the easy way out, and now our future is that much bleaker. Again, it's like, if your goal is to get healthy and lose weight, the way to start off is with diet and a good exercise program. That's what we need. Unfortunately, what Ben Bernanke gave us is Twinkies and ice cream and a big couch to lie back on while we watch television. That might be a better way, a more fun way, a more popular way to start to produce any kind of meaningful results. And of course, in addition to thanking Greenspan and Bernanke and how much praise they're giving Bernanke, of course one of the reasons they're liking him is everybody thinks the economy is better because they're watching stock prices go up, they're watching commodity prices go up, oil prices go up. All this means that things are better. There's a little bit of a bounce in housing sales. Of course, why are housing sales bouncing? The government is giving out tax credits to people to buy homes. And a lot of these people are taking those tax credits to FHA where they're buying for virtually zero down. So how are we boosting home sales? If you look at the big jump in sales, it's on the low end. And so low-end homes, the high-end homes are still falling in value and the sales are still contracting, but the low-end homes are buying. They're selling. Why are they selling? Well, because you've got people buying it with nothing down. It's a gimmick. It's an artificial demand based on debt. Who knows if the people buying these houses can really afford them? They don't even care because they're not paying for them. And of course, you have had a number of foreclosure sales, and you've had, some people coming in to try to pick up what may or may not turn out to be a bargain. But sales are moving up from very, very depressed levels. We're getting other signs where, we're not losing jobs as rapidly as we were. The economic numbers are not deteriorating as rapidly as they were, and everybody is embracing these green shoots. Again, just because things are not getting worse as rapidly as they were does not mean they're getting better. And, of course, you've got to get some short-term benefit from all this stimulus. I mean, that's the problem with the stimulus. It does give you that artificial bounce so that you think things are getting better. Maybe it's like, if you break your leg, but then you shoot yourself up with some kind of stimulus where you don't feel the broken leg, and so you can walk on it anyway. Maybe it's like you think that you're okay, but you're actually doing more damage to your leg. You shouldn't be on that leg. The fact that you've got this artificial supplement in there that's not letting you feel the broken leg, and so you walk on it or run on it. I know they do this with football players. They juice them up with something. They injure themselves and they want to keep them in the game, and sometimes keeping them in the game because they want to just win that game. They do a lot more long-term damage to the player, and so that's basically what's happening. They want to keep this game going, and so they're shooting the economy up, and you're going to get something, and it looks like things are getting better, but they're not getting better. And of course, one of the ways you know that they're not getting better is how are we measuring this? And every person I hear talking on television, what are they looking for signs the economy is going? Are the consumers out there spending? Are they buying more stuff? Are they going back to the malls? Are they buying more cars? Are they spending money? But we know that that's not the solution. We know that that's the problem. What we want is the savings rate moving up. Yes, but is the deficit shrinking? Are we creating more manufacturing jobs? Are we deregulating? Are we shrinking government? Are we raising interest rates? Are we, do we discourage borrowing? Are we encouraging more savings? Are we making our economy more productive by lower regulation and smaller government and a higher interest rates to attract more capital? I mean, are we doing the things necessary to rebuild the economy? Have we learned anything from our mistakes, right? Is there any change, right? Are we doing anything to dig our way out of a hole? And the answer there is always no. We're not doing anything to get out of the hole. We're doing everything to make the hole bigger. So that's how we know for sure that there is no real recovery here. I don't know how long the public or the Wall Street is going to be fooled by this data, whether it's another 6 months, whether it's another year. Remember when Greenspan pulled this thing off, he bought a lot of time. The housing bubble, bought us 4 or 5 years of phony prosperity and massive debt. But, it took a long time. I mean, 2003, 2004, 2005, I was a lone voice criticizing what was going on. The vast majority believed everything was great. That's the same thing is going to happen again, and it is happening now. I just don't think we're going to be able to buy 4 or 5 years worth of phony prosperity based on the situation. I think we're starting from a much worse situation fundamentally. And what we're doing to buy some time, again, is so much more damaging structurally to our economy that I would be surprised if we even get 2 or 3 years of phony prosperity before the roof comes caving down around us and we have a much bigger disaster than the one that we've just been through. So maybe 1 or 2 years kind of tops, if that, and it could be shorter. But I am as convinced as ever, that this is not going to be this V-shaped recovery, that we're not going to, there is no recovery, that this is likely to be a depression. We're going to be in this decline long after Barack Obama finishes his term in office. If by some reason he manages to get reelected, then we're probably going to be in this depression through the remainder of his second term as well. And I'm as convinced about these forecasts as I was about anything I said a few years earlier about what would lead us into this mess, about the various pins that would prick our bubble economy, and the people who are so convinced that we solved the problem, that we're on the path to recovery, that the stock market's going to keep going up, that the economy is in great shape. These are the people, by and large, who were completely blindsided by the downturn, who were, this is the Goldilocks crowd, the people who said everything was perfect, the people who, anytime anybody criticized the economy like me, they compared them to Michael Moore. There are a few people who were bullish then and who still are bearish. I was listening to Joe Battipaglia today. He's still negative, and I think he's on the right track. You still got Jim Rogers. You still got in Singapore, Mark Faber is negative. There's still some people who understand what's going on, but a few of the people who were negative have turned more positive, and I just think that they still don't understand the big picture. They don't, they might have had part of the situation right. They understood the problems in housing. They knew that a recession was coming, but they don't understand the broader fundamental problems structurally with the U.S. economy. They don't appreciate the depths of the currency crisis that lies ahead and how that is going to impact interest rates and consumer prices. They just assume that since we've been able to run these budget deficits and trade deficits for so long, that we're going to be able to run them forever. And they buy into the idea that a legitimate economy can be based on spending other people's money, on consuming stuff but not making anything. They're going to have a rude awakening when this crisis really kicks into a higher gear. Anyway, let me grab the phones, and I know we've got some calls. The number is 888-678-9597, 888-678-9597. Ross is up first from Toledo, Ohio.
Hello?
Hey, Ross, you're on the air with Peter Schiff.
Hi, Peter. First of all, I'd like to send my condolences to you and your girlfriend's family.
Thank you.
And quick question for you. Been a lot of buzz going around the internet about, I think it first appeared in Harry Schultz's newsletter about a possible bank holiday coming up soon. What are your thoughts on that, and what it would lead to a dollar devaluation?
Well, I haven't heard anything about that, and I don't really think there's going to be a need for a bank holiday now. Remember, when we had the bank holidays during the Depression, it was because, the banks didn't have the funds. If there was a run on the bank and they had some bad loans, but now the government is guaranteeing all the bank accounts. I think I've even heard rumors, they raised it from $100,000 to $250,000 for the FDIC. I think there's some talk about making it unlimited or something. And, the government's just not going to let anybody lose money. They're not going to let these banks fail. They're going to print money and bail them out, which is worse. And, of course, the reason that so many banks do so many stupid things with our money is because of the moral hazard that results from government-guaranteed bank deposits. Ideally, we don't want the government's guaranteeing bank deposits, because then the depositors are more concerned about the institutions where they deposit their money. Therefore, the institutions compete with one another based on who can have the safest bank, who could take the least amount of risk. And then you have a fundamentally sound banking system. But right now, where the government guarantees all the bank accounts, nobody cares about risks, and so everybody competes based on who can pay the most, which means the competition is who can be the riskiest bank, and the regulation is left to the government, because there's no more market regulation. And that is the problem, because market regulation works, government regulation doesn't, because it's easily corruptible. And there is no real market forces. It's just politicians making stuff up. It's just people, and they're fallible. And they're particularly fallible when you put them in an elected position where they're vying to get themselves reelected, and they're trying to peddle their influence, and they become captive of the industries they regulate. And it's a disaster. So the more the government interferes with the free market, the more problems they create, the more losses, the more malinvestments, and then, of course, they blame the problems not on the fact that they're there interfering with the free market, but they blame it on the free market. And it's so, it's such a terrible situation to be in, when, it's the free market that gets the blame for the government's encroachment into the market, and then the result is that the government gets bigger and bigger, and we get into this spiral where the end is a complete, with the government controlling everything, and you get a disastrous standard of living.
Well, thank you. It was good to hear your opinion on that, and I think you've been an invaluable resource during these hard economic times. So thanks, Peter.
Thanks, Ross. Oh, I wanted to mention too on my Senate bid, I have been talking to some people that are launching another money bomb, and I think that money bomb is set to go off, I think September 9th or 10th or 11th. I forget the date. But they called me up, and they're basically saying, look, Peter, what's it going to take? Are you in or you're out? How much money do you need to raise? And I know I've been saying I'm probably going to do it, but I did basically commit to them, and so that if I get to $1.5 million on my website in money raised, that I'm in for sure, that I will do it. And so that gives them something to shoot for on the money bomb. But if you want to help, if you want to pitch in on this goal, you don't have to wait for the money bomb. You can start right now. There's about almost $940,000 raised so far, of which I've contributed $50,000. But that means there's close to 900 that's been put in by other people, by people listening to this show. There was a few $100,000 that was raised on the last money bomb. I know there was a money bomb that was done for Rand Paul's campaign. He raised over $400,000 in one day. So I think it's doable. I think if enough people really want me in there, they can contribute. They can contribute on the money bomb. They can contribute now. I mean, it's not, if we get to 1.5 million before the money bomb goes off, then I'm in. It doesn't mean that you shouldn't contribute in the money bomb, because, if I'm in, I'm going to need a lot more money than 1.5 million. I'm going to need millions more. I'm going to need $20 million. So, there's no reason to not participate in the money bomb. If I've raised the 1.5 million, maybe there's more reason, because you know that I'm in and I'm going to need a lot of money. But in the meantime, if you really want to make this happen, then that's what we need. 1.5 million in total money raised, and I am in for sure, in it to win it. I'll be spending an entire year of my life pretty much running for office. So if you want to make it happen, go to the site, shifforsenate.com. Make a contribution. If you've made one already, make another one. And talk to your friends. I've made some calls. I've called some clients. A number of my clients have coughed up maximum contributions. I thank everybody for the small and the large. I've had clients write me checks for, $2,400, $4,800. Many clients have given me $9,600, which is, the maximum for a couple is $4,800 for the general election, $4,800 for the primary. I've had people write me checks up front for both. And again, if for some reason I don't run, I'm going to send the money back. So you got nothing to lose. Anyway, so again, it's shifforsenate.com. 1.5 million to enter the race. It's a crowded field for the Republican nomination. I have it on good authority that Linda McMahon, the the wife of Vince McMahon of WWF fame, is also going to be entering this race. She's going to spend, or threatening to spend, $25 million of their fortune running for office. That's a lot of money to spend. But, at the end of the day, I don't think she's going to be able to win. Hopefully, that money will take enough votes away from my opponents to let me win. Because I don't think, I think if people really want an outsider, and that's what, she'd be running as an outsider like me. I mean, everybody else who's running is either a career politician or has very close ties with politicians, has been involved in politicians their whole life. So the only candidates of the five that would be non-politicians would be the wife of the founder of the World Wrestling Federation and someone who is now working as CFO of the World Wrestling Federation, and me. And certainly if you're going to go with an outsider, I think my background and my experience is a lot better than, running wrestling. I mean, wrestling is show business. She's like a producer. I mean, she's probably maybe a decent businesswoman. I don't really know. I mean, I know the company is very successful. But it's entertainment. It's Hollywood. It's Showtime. It doesn't mean she understands anything about economics or, understands the predicament the country's in, how we got into this mess, and what it needs to get out of it. Sure, she's not a politician, but you got to be more than just not a politician to get the job done. So I think when people are looking for, hey, I want a non-politician, who should I vote for? Linda McMahon or Peter Schiff. I think I'm going to get more votes from that crowd. Although it is interesting, when you think about it, politics is a lot like wrestling. I know somebody said this. I think it might have been what's his name in Minnesota. I'm bad with names. Jesse Ventura, because he said that in wrestling, of course, people, the guys want to kill each other. There's these characters, and they get in there, and they make a lot of noise, and they fight, and there's blood, and they're trying to kill each other, and you think they hate each other, but the reality is they're best buddies. I mean, they're good friends, or art partying. It's all fake, right? It's all show for the crowd. And that's kind of the way it is in Washington. You get the Democrats and the Republicans. They make a lot of noise. They pretend there's a big difference between them. And they put on this big fight, publicly. But then behind the scenes, they're all great buddies. They're out having beers, chasing girls, It's just a club. They all just want to stay elected. They all just want to stay in office. And they want the public to think that there's some dynamic opposition going on, that there's a real choice there, and that their vote really matters. When all along, it doesn't. Because if you look at the incumbents and how many incumbents get reelected, they all get reelected. I mean, it's a small percentage of people who don't get reelected. And so they stay there, and that's what they're trying to do. They all want to stay in office, Democrats, Republicans alike, and and they're comfortable. And as long as the public is fooled and they think they have a real choice, and they've got no choice at all. But the people in Connecticut, if I run, and if we raise this $1.5 million, I will run. If we run, they're going to have a choice. I will not be like any other candidate. I will be very different, and when people vote for me, they will be voting for me. They're not going to be voting against somebody else. I can guarantee that. They'll be voting for Peter Schiff. Anyway, on the call now is Chris in New York City.
Hey, Peter. First-time caller. Sorry to hear about your loss. I have a few points. The first one is in regards to the cash for clunkers. And, I know that you were very against it, and, you gave a very eloquent explanation of why it made no sense. And you did it on many shows. And it's funny because, I have friends who used to work in the mortgage market or, making the loans, primarily subprime loans. And I have a bunch of friends now who are selling cars. And the conversation, what they're telling me about the general market is they duplicate each other. In the mortgage mess, you had a whole bunch of people coming in and taking out loans they couldn't afford. And all these guys who were selling these loans knew these people were going to get foreclosed on. The same thing is happening right now. I have friends who are in the trenches, they're selling these cars, and, business was dead. All of a sudden, cash for clunkers comes, business is good, and guess what? They fully know all these cars, or a majority of them, are going to get repossessed. And it's a really sad.
People are getting enticed into this, like a guy with candy enticing young children so that he can molest them. You've got people who have an old beat up car for a reason. People that have a clunker, they don't have a clunker because that's what they want. It's because that's all they can afford. Right? I mean, if you have, and what's happening is they're getting suckered into this because it's like, hey, it's a once-in-a-lifetime opportunity to come in and buy a car for no money down, right? Nothing down at all, because the $4,500 is your down payment. And in fact, I saw one advertisement, I think it was Chrysler, where you got a $1,500 rebate. So not only can you buy your car with nothing down, you can walk into a showroom with a clunker and walk out the door with a brand new car and $1,500 in your pocket.
Right.
I mean, who can resist that? And and they were throwing the credit standards out the window. And I wrote about this. I talked about this, that in a year or so, we're going to need a bailout for the people who took advantage of Casper clunkers because they can't make their payments. Because if they could afford a payment, they would have bought a new car years ago. They wouldn't be in a clunker.
Exactly. And this thing is targeted towards the lower-end cars. The people with money, I would think, are buying the more expensive cars. So this is really focusing on the people that are in the most pain right now.
Look, I mean, it is completely stupid. The fact that so many people like this thing. I wrote my other piece, Dough for Dumps, talking about, hey, let's do the same thing, give people money to destroy their houses to get new ones. I mean, it makes just total, fundamental sense. It's intuitive that if you're in debt, you don't want to go deeper in debt. And, if you have a problem, you don't solve it by going into debt. No family in their right mind, if you lose your job and you have a bunch of credit card bills and you're thinking, okay, how do we solve this problem? How do we get solvent? Nobody would say, oh, let's put in a swimming pool. Oh, let's take a European vacation. Nobody would think that way. Everybody would think about, okay, what can we cut back? What can we give up our gym membership? Can we cut off cable TV? Can I turn in my Mercedes and get a used car? Can we cancel our vacations? Maybe I can get a part-time job. What do we have that we can sell? Do we have any, stuff I don't need? Maybe, people make these things to get back on track. They don't. I mean, this is insane as a nation for us to admit we borrowed all this money. We borrowed too much money to buy cars and houses, and we're in deep debt. To say, let's go out and spend some more. It's like, let's have, let's try to. You get the party going again. Hey, there's one keg of beer that we didn't open. Let's tap it.
Well, thankfully,
this is so crazy.
Thankfully, you're a loud voice in this. I really wish that, I watch all of these shows, and it disturbs me. It really gets me emotional about the country. That this nation of YouTube, this whole generation of YouTube, has truly exposed. Unintentionally, the fraud that was going on. You led a revolution more or less, and exposing, certain individuals on these talk shows that.
Well,
they're journalists. They're not business
people. Let's hope it could become a revolution. Maybe it's an incipient revolution. I mean, there are a number of people out there. But look, my YouTube videos, I look, people, 20,000 people watch them on my site maybe. And I know on a number of sites people pick them up. So maybe 50 to 100,000 people can watch one of them. But, in the scheme of things, there are millions. There are 100 million, 200 million Americans, whatever. Most people are not watching these things. Most people are still in the dark. But what people need to do, and I think what the people who do listen to my stuff and read my stuff, it's really important to try to get other people involved. Get other people if you're especially if you're on the Facebook or anything, to tell other people, hey, check out Peter Schiff. Go to his website, go to his blog, look, support him for the Senate. And tell your friends. When I've called some of my clients about kicking in a little cash for my exploratory committee because I'm thinking about running, will you support me? I always ask them, do the same thing I'm doing. I'm just going through my Rolodex, calling some people. Everybody's got a Rolodex. Everybody's got people that they can call.
I'm definitely spreading the word. I'm spreading that, you're the voice of the best voice voice of reason I've heard in years. Anyway,
and the thing is, when you've got truth on your side, and my points are so simple to comprehend that once somebody of even just moderate intelligence can listen, right, to the way I explain things and my perspective, and weighed against what they're hearing in the mainstream, it's so obvious who's right.
Right.
My stuff makes sheer common sense. They're asking us, they're trying to get us to believe in the Tooth Fairy and the Easter Bunny and Santa Claus. And I'll basically say, no, it's not Santa Claus. It's, Mommy and Daddy are coming down. I mean, my explanation makes a lot of sense. Theirs doesn't.
Right. All right. I couldn't agree more with all of that. My last, I'll keep it quick. My real question is, everyone talks about the U.S.'s, what's the U.S. exit strategy going to be? And obviously they don't really have one. I can't fathom that they have one. And
yeah, well, that's the joke. They have to pretend there is one, but the reality is there is no exit strategy. That's why we shouldn't have entered.
Right.
It's like the Roach Motel, right? You check in, but you don't check out.
Right.
If the thing is, this situation is so bad, the best exit strategy is not to have an entrance strategy. Just don't go there in the first place.
Right.
Once you go there, once you pass the point of no return, there's no coming back. It's like, once you lose your virginity, there's no exit strategy. You can't get it back. It's gone.
Well, I again agree. My question for you, and I hope you have some insight. Well, I'm sure you do. But what you thought was going to happen hasn't happened yet, which is the Chinese and I guess the rest of the foreigners holding our debt. They haven't totally dumped yet, and that's the exit strategy that I think.
They will.
Well, that's the exit strategy that I'm interested in, and what you think they're thinking, and how do you think they're going to get out of this?
I said, I've never been able to figure out why they're doing it. I wish they'd tell me. It doesn't make any sense. But look, all I know is nobody is going to be stupid forever. It was Abraham Lincoln. I think you can fool some of the people some all the time, and all the people some of the time, but you can't fool all the people all the time. That applies to the Chinese. There's 1 billion Chinese, and we can't keep fooling them. But meanwhile, if you look at what's going on economically, their economies are good. We're doing a lot of deals in China. I'm doing deals there. We just launched our China fund, Euro-Pacific Halter China fund. I've got 2 private placements we've done. Great deals. There's a lot of money. My analysts have recently been to China. The economy is strong. Things are picking up. I think the government is still making mistakes. They're printing too much money. I'm looking at all the economic news. Look at how China is now the biggest trading partner of Japan. China has replaced the U.S. as Japan's biggest export market. Other countries, I'm reading articles where companies that are losing business in the U.S. are making up the slack by dealing in China and Southeast Asia and India. And the world is changing. And the world is starting to realize that they don't have to hold these dollars. So it's only a question of time. It's going to happen. And, it's as I think I said on one of these shows, the woman interviewing me saying, well, can't we just, step on the brake, from this? And I said, there is no, we can't. The brakes are out now. I mean, we should have stepped on the brakes a long time ago. All we can do now is brace for impact because we know we're going to crash, And that's what I'm trying to do. Unfortunately, policy is don't brace for impact. Just pedal to the metal, full steam ahead. Let's hit that brick wall full force.
Okay, and one final comment. I talked to my grandparents. I talked to people, up there in age who lived through the Depression, and I try to explain to them, what your message, and a lot of times I get back the same answer, which is, there's always been inflation, and that's what interest rates are for. It protects your cash. And that's the reoccurring argument. If you have money, maybe not go into long term.
Yeah, I mean there hasn't always been inflation. I mean we had, from 1800 to 1790 to 1913 for 120 years we had deflation. We had the Industrial Revolution during a period of falling prices. So we've had inflation with the Federal Reserve, but we haven't always had hyperinflation. What we're going to experience now is not just run-of-the-mill inflation. This is way beyond that.
So you're saying money markets won't protect you short-term?
No, because the yields won't go up high enough. You can't. I mean, the only real protection is to not own dollars. So you got to figure out what you're going to own other than dollars. Are you going to own precious metals? Could you own gold or silver? I like it. I own those things. You know, we sell them through the Perth Mint. I am in the process right now of setting up Euro-Pacific precious metals. I hope the company will be up and running by the end of September, early October, to sell physical coins for delivery. I feel very strongly, and so I'm going to get into that market personally. You know, foreign stocks. I love foreign stocks. I'm very optimistic that Asia will successfully decouple, that they will come to their senses. I think there's a tremendous amount of money to be made in Chinese companies and benefiting from the growing standard of living in mainland China. My argument has always been that we are holding the Chinese back, that propping us up. In the process of doing that, they're hurting themselves. They're sacrificing, and that when Chinese consumers, when Chinese workers get to retain and keep the full value of their labor, of their productivity, when they retain their own purchasing power, and they start buying all the things that they're doing without that we take for granted, you know, I think you're going to have a boom in China even bigger than the one that they've got now. I think people, you know, 20 or 30 years from now are going to look back at this as just a huge opportunity to have gotten in on the ground floor of a major advancement in a country, in a standard of living, in an economy. I'm hoping that one day those opportunities will present themselves in the United States. You know, if we can really get our act together, if we can really deregulate and dramatically shrink the federal government, take our lumps, restore sound money, the dollar is going to lose value. There's no question based on what we've already done. Unfortunately, the dollar has to go down. But it doesn't have to go to zero. We can put a floor under the dollar if we pursue the right policies. And the dollar could eventually recover and gain ground if we do the right thing. So hopefully, you know, some point down the line, you know, there could be tremendous opportunity in the United States. We could be the world's best emerging market. But I think we're going to submerge a lot first, unfortunately, based on the mistakes we've made in the past and the mistakes that we continue to make now and the mistakes that we're likely to make in the future.
Well, thank you very much, Peter. I appreciate your time. I'll give some time for another caller. And I wish you much success in the Senate race. I'm hopeful that you'll do it. And, you know, keep it going.
Thank you.
Okay, thanks.
All right, next up is a Canadian, Brian from Alberta. And also on another note, I am in the process, I am negotiating. We've reached an understanding in a deal to open up Euro-Pacific Capital Canada. It would be called Euro-Pacific Canada. We'd be opening up the first office in Toronto, and that probably would happen maybe the middle of next year. So, you know, a lot of Canadians who listen to me, we've got a lot of Canadians in the database who are interested in doing business with Euro-Pacific Capital and working with me, and you're going to get your chance, hopefully, in 2010. Anyway, let me finish talking with Brian.
In it to win it, Schiff. How you doing?
Good. How are you?
Good. You pretty much just answered most of my question right there. These mutual funds, though, that's what I tried to buy a couple days ago, and I was told no, even though it's on the New York Stock Exchange.
Yeah, well, apparently it's in order for foreigners to buy, certain things have to happen. And those things are going to happen, and so foreigners will be able to buy the mutual funds. I'm not really sure yet about Canadians, because in order for a Canadian to buy, see, right now the only way you can buy the Euro-Pacific China Fund is through Euro-Pacific. So, you know, I know that if you live in Germany or you live in Japan or Australia, you will be able to buy it. I don't know if you can buy it yet, but I'm not sure what the rules are going to be with Canada. Of course, once I have my Canadian broker-dealer, then that will be different. But yeah, there's all kinds of, you know, weird and cumbersome security regulations that really interfere and make it difficult for investors.
Oh, I know. Nobody, including my own government, could tell me why I couldn't do business with you. I was always so confused.
Yeah, it's just government. It's just government interfering with commerce, for political reasons, and it's just But anyway, and remember, and so it'll be around. I mean, the fund for a while. There was a there was a mispricing in it for a while. What happened is the fund was supposed to be launched. We opened it up, and then they wouldn't let us trade it for 5 days or so because some other paperwork wasn't right. And so during that time, they mispriced the fund, and so it had the NAV down about 6%.
Yeah, I saw that.
It never really went down. And so they moved it back up, and so we had to readjust some trades. Because people thought, hey, how could the fund have fallen? It didn't. I mean, it was almost all cash. Now, I know it's more 25 or 35%. I mean, we're gradually investing the cash into the market. But at the time when it had that 6% drop, I mean, it was, maybe it was like 98% cash. So. But anyway, so they've corrected all that, and basically the NAV has been slowly rising, basically, since we started, because we started at a little bit of a pullback, and the market's been recovering.
All right. Well, I like those emails you send out, your favorite stock picks, where you give a description and the picture of the graph. I got my Chinese TV stock off you from there, and I appreciate that. I made quite a bit of money.
Oh yeah,
Thank you.
Yeah, that was a huge winner. I wish they could all be like that one.
No kidding. Thanks a lot, Peter.
Thanks for the call. Anyway, next up, another Toronto call, or Canada call, rather, is Toronto. It's Abe. How are you doing?
Yes, hi, Peter. Thanks for taking my call.
Sure, thanks for calling up.
I enjoy your blog very much, even though we're in a different country. Canada is a little bit of a different landscape. It's, as you know, a country where regulation isn't a dirty word, and we're thankful for it. But my question is this. I've been listening to your financial scenario, and you suggest that money and interest rates and financing charges may dramatically increase in the next few years. I'm wondering, with that scenario, is investing or purchasing real estate a commodity that might be worthwhile, or will people not be able to afford the real estate and prices might fall?
Yeah, as I said, I don't, Canada is probably a little different than the U.S. Canadian real estate, I think, will hold up a lot better, especially if a lot of Americans are trying to leave and move up to Canada. I don't think there'll be that many Canadians trying to come down here, although you never know. They might buy some vacation properties down in Florida. But, no, I think generally what's going to happen is real estate is a function of the relative affluence of the people who are in a position to buy or rent the real estate. So, the richer the country, the more pricey the real estate's going to be. Now, certainly you can have a poor country where beachfront property, for example, can be expensive because you have a lot of tourists coming in. So certainly you'll have varying situations in the United States. Wealthy, Chinese or Japanese might be interested in buying a beachfront property, in Hawaii, but they certainly aren't interested in buying a condo in, Altoona, Pennsylvania. But in general, I think in the really difficult economic times that lie ahead, which is high inflation, high unemployment, high interest rates, real estate is going to lose a lot of value in real terms. Now, it's possible that if inflation is high enough, if we really get hyperinflation, that real estate prices will in fact rise in terms of dollars. But I think they will fall dramatically in terms of everything else. And, of course, when people lose their jobs, and they have very little money, they have to eat. They need energy. But they don't necessarily have to pay their rent. They can move in with a friend. They can move in with their parents. Or they can simply not pay their rent and wait 6 months or a year to get evicted. And so I think it's going to be a lot of pressure on rents in real terms. And I think you can look at it maybe right now, and I'm just making these numbers up, so they're not necessarily real, but it's just for a comparison. Let's say right now rents represent 30%, or mortgages and rents are 30% of a family's budget, and food is 5%. Let's just say that's what it is. Well, if we have hyperinflation, right, and food prices just take off and energy prices take off, let's say that food goes from 5% of your budget to 30% of your budget or 40% of your budget. Let's say that energy goes from 5 or 10% of your budget to 30% of your budget. Well, how does that work then unless rents shrink, housing costs shrink? Because they can come down, because it's just a function. food can be sold everywhere, right? If you're a farmer and you're growing crops, your market is the whole world. You can export. If you're an oil company, you can export your oil. So if there's somebody in China or Japan or Europe willing to buy it, they can pay for it. But if you've got apartment buildings, in Des Moines, Iowa, who can you rent them to? The people living there. And if they're unemployed and they're spending all their money on food, what can you charge them in rent? Not much. You can run an ad in Tokyo and hope that somebody comes to Des Moines, Iowa to try to rent your place for vacation, but you're probably not going to get any takers. So, this is not, if you have a nation in decline, if you have a nation that's going to go through an inflationary depression, you don't want to own real estate in that nation. That is not the way to get rich, right? You got to, now, when the collapse comes, when you have the massive inflation, when you have sky-high interest rates and a collapse, that's the time to bring your money back into the country. That's the time to sell your gold, to sell your foreign assets, and then buy U.S. real estate for what will amount to the equivalent of pennies on the dollar. But not now. The only time I would buy U.S. real estate right now, there's only one time I think it makes any sense. If you can get that government tax credit and you can use it so that you can get your 3% down FHA mortgage so you can buy a house with nothing down, so it costs you zero. You have no money in the thing, so you have nothing to lose. And if you can get a 30-year mortgage, that's 5 or 6%, and that mortgage represents a lower cost than what you can rent a place for, then maybe you can consider doing it because you have nothing to lose because you put nothing down. You can always walk away, and if there's massive inflation, you own the house for free. It's not, you're not going to get rich, but, at least you'll wipe out, you'll have an asset for free.
Right. Okay. Well, thanks very much, Peter. Thanks for your response.
Anyway, thanks for the call. Another caller, this might be the last caller for the day, we'll see. It's Marissa in Atlanta, Georgia.
Hi, Peter. My name is Marissa, and thank you for taking my call. My condolences to you and your girlfriend's family also. We have about 20% of our assets in gold, silver, commodity stocks, and another 20% in global stocks. But we also got out a lot in March, kind of, for fear of further decline, and so I'm kind of looking at timing now to get in a little bit further with some more of our cash. And a lot of contrarians, I believe, including Jim Rogers, Mark Faber, Todd Harrison at Minionville, are talking about a W-shaped market formation. You mentioned the problems Bernanke has buried coming home to roost in the next 1 to 2 years. My question to you is, would this indicate that you're buying into a W-shaped recovery or market formation as well? And if so...
I don't think there's going to be a recovery at all in the United States, but
okay.
I do think that the asset that is still in the most danger is U.S. dollars, is cash.
Right.
But it's very hard to try to short-term time the market. As you know, I mean, I didn't, try, time it in 2008. The market went down. You tried to time it. You sold stocks in March, and those stocks have gone up a lot since you sold them. So it's difficult. I mean, since I'm confident that I know how things are going to end up, right? Let's say how a football game is going to end. Maybe you had a time machine or whatever. You know which team is going to end. Just bet the winner. Don't try to bet who's going to be ahead at the quarter, who's going to be ahead. You don't know. If you don't know exactly how the game is going to progress, you only know how it's going to end up. And so rather than trying to make bets based on outcomes that I don't know for sure, where all I'm doing is guessing, right? Now, I could be wrong, but I am 100% convinced that I'm right on how this is going to end up. I don't know how we're going to get there, right? I know the destination. I just don't know the route. And so I'm going to invest for the destination and make sure that I'm not leveraged up in case I'm short-term wrong. I don't want to get a bunch of margin calls and go broke because I timed it wrong. So, but if you're not talking about leverage investments, if you're talking about taking money that's long-term money, then I'd rather be invested. I'd rather be invested than in cash, and I'd rather run the risk that I have to ride out a market decline than run the risk of having the dollar wiped out and having nothing left. Because, even people that were down 50% last year, if you're in dollars and you're in all cash and we get hyperinflation, you're down 100%. And the people who are down 50%, you can come back. Many of them already have. Many of those people are up. Some of them are, they're still down, but you can come back. If you're down 100%, you're never coming back. So if we wipe out the dollar and you decided to play it safe, in your mind, and you held dollars, and now you bet wrong and there's hyperinflation, there is no second chance. There is no do-over. Right? So I think that's the greater risk. So, I'm willing to ride out the fluctuations because I'm confident in the outcome. Now, are you working with investments or another firm?
Yes, actually, I am. Peter, just on that, just again, sorry, my three-year-old's talking to me too. So basically, and I think what these guys are talking about with the W formation is, I think the last leg up is when they see the dollar falling in value and the asset prices going up. So they can be consistent with your strategy and the idea with your general idea of the future. But I think what they're saying is they don't see the dollar plummeting yet, but they do see.
Well, you know
market.
what? I mean, nobody knows exactly, right? We're all trying to make our best guess as to how it may or may not unfold.
Right.
Nobody knows for sure. All I know is me, Mark Faber, and Jimmy Rogers all agree on the final outcome.
Right.
Right. We all agree on the final outcome. So let's just invest for that. Let's not try to finesse it. Let's not try to be too cute, because we might end up being our own worst enemy. So I just want to invest for the one thing I'm sure of, and not try to invest based on things that I can't possibly know for sure.
Now, could I just ask one more thing of it? Because you have yourself said on the radio before, that give to Euro Pacific, what you want to invest right now, and then hold back cash. You can hold back cash. So I'm just wondering, do you just rush in? I mean, dollar cost average a bit getting in?
Yeah, I mean, look, there's different approaches. If you want to hold cash, I like holding the Japanese yen based on the way it's been correlated. I think if you're going to hold cash, it seems like the yen is the way to go. Also the Chinese RMB, because at least if the dollar collapses and you're in that cash, you're not going to be wiped out. So I think for people who want to go to cash, that is the way to do it.
Can I hold Chinese RMB through an ETF? Or
you can buy it through. I know you can buy it through the Merck Asia fund, currency fund. It's not all RMB, but I think it's about 80%.
Oh, great.
We can buy the Japanese yen very easily at Euro Pacific. I own Japanese yen in my account. But of course, what you need to do when it comes to these specific investment strategies and ideas is to talk to a broker at Euro Pacific Capital, go through the risks, make sure that find the strategy that you can tolerate the risk that's suitable for your particular situation. And then try to find a way to implement the strategy.
Oh, thank you so much, Peter.
Okay, thanks for calling. Anyway, that was the last call. We are running out of time here. I've got just a couple of minutes. Anyway, again, as I mentioned earlier in the hour, $1.5 million to get into the Senate race. We're at 930,000 now. I'd like to get to 1.5 million by mid-September. Get this thing going. I know I have to be in Poland. I'm speaking at a conference there in about a week and a half, and then I'm going to one other stop in Europe, and I'll be back, and hopefully we can get this thing going. Anyway, go to shiftforsenate.com. Also, remember my new book, Crash Proof 2.0, How to Profit from the Economic Collapse. You can order it now on Amazon. It's coming out in about a month, I think late September 22nd. You can get it on Amazon through my website, www.europac.net. Make sure to call toll-free to talk to a Euro Pacific Capital broker, 800-727-7922. So long, everybody. Be back again next week.